All right, welcome everyone. This is Bob Maurer. It is Monday, the 16th of June, round about noon my time. I want to do a review of the current seasonal futures spread strategies, see how things are looking for the ongoing spreads. I introduced a handful of new ones last week. So we'll see where they're at, see if there's any modifications, which I don't believe there is. And I do believe that we should be in about four of the five. Take a look here. So down into the portal, you'll see the most current PDF version uploaded a bit earlier. And here we have it for this week. That should actually say the week 15, so changed. And this is what we have. So top row, bull spread, live cattle number 359. Next row is bear spread, soybeans 360, 61 bear spread in rice. And this row here, bull spread in wheat, number 362, does not look like it should be filled. So the ones in yellow are the ones that I've filled. And then 363 is the bear spread in orange juice. So let's see how these are. Hop on over to the charts in order here. So this is cattle. So number 359, bull spread. We had three entry levels. Entry one was the benchmark at 142 cents. We missed the 90 cents by touching it by one tick, guaranteeing a fill. It's that one. Keep it working for. Market's been on a really good bull trend, as has the live cattle futures. Anybody who watches the ag markets, and in particular livestock, know that beef and hogs, cattle and hogs are having a so far. So solid fundamentals at the moment, and this market can drive higher. We had a little bit of a pullback over the last couple few days in the live cattle market, but it looks like a bit of a bounce. So far, everything's going according to plan. Two levels look like they should be filled. And if you got filled, you're currently sitting with an unrealized loss somewhere about price of right about there. We're at 110. Okay, so that is bull spread number 359. All's going according to plan. Two levels are filled, still sitting there. Then we have soybeans. This is a bear spread, 360. Our entry levels were are -7.5, -6.5, and -6. Market on Friday touched -6 and then ended up towards the low end of the range there. Hadn't had much follow through yet. So definitely -7.5 and -6 should be filled. -6 a maybe because we only touched it. We didn't price. So that's where we're at. Hopefully, some of you did get the -6, but in either case, if you're able to average in at -6.5 and -7.5, then your average price would obviously be 7, which you're sitting with a current very modest unrealized gain. So opposite of cattle that we just talked about, the soybean market's been on a pretty good slide to the downside. The spread has got a bit of a bounce. Now we're looking for hopefully a break to get resumption of the downtrend. Seasonal is in the driver's seat. That's always the case with these seasonal tendency recommendations. So this would align well with the seasonal and chart. Halfway back, and let's see. Depends on where you want to draw your lines, right? But halfway back, looking more at a weekly chart. This is the daily. Puts the Fibonacci retracement about -6, so right where that resistance held last week. Help us out too. So basically, downtrend, bit of a bounce. We need to see a resumption of the downtrend. Hopefully, we get 9 at least, and then maybe -12 if we can stretch it. Not a whole lot of time left in this one. It only goes till the 24th. That is the bear spread in soybeans. No changes as of yet. Everything's going according to plan. Then we have rice futures, number 361. So I did give a caveat on this one that it's not the most necessarily liquid at market. You can tell by the margin requirement being dollars, which is 90 cent, less than 90 cent move range, I should say. So clearly, the clearinghouse is sending out a yellow flag that this thing can be a mover. So bear that in mind for those of you who are thinking about getting in. But our entry levels were negative 12 half and negative 8 half. The negative 8 half is still working. Negative 12 half we got on the 11th when the market rallied up 11 half. So this should be filled. And currently the market is only in trade today is negative 16. So heading our way. Kind of choppy for 2 days after getting filled. That would have been Thursday and Friday of last week. Resuming this week, we've got that bit of a bearish move, getting down to negative 16 as the last trade. Last trade. Let's see where. Negative 16. So yeah, wide market. Negative 16 and negative 16 trade. And the volume that traded so far today, 4 contracts. My point about it being a liquid. All right, but heading our way. Everything's going according to plan. First exit is negative 17 half. For those who want to press it, be negative 21 half. This goes all the way to August 12th. My guess is it's not going to take all the way to August 12th, and you can clearly see that. You never know, though. In it for the long haul until you're not. That's strategy number 361. Should be filled and currently sitting with some level of unrealized. Right, then we're moving on to wheat. All right, so this is strategy number 362, bull spread in wheats. This looks like you should have been filled. So entry level 1 is negative 42, negative 43 is level 2, negative 44 half is level 3. So we're looking to average in on a dip. Basically, you can see this big range. We want to stay in the big range. Also, it kind of lines up, well, does line up with seasonal tendency, which is bullish. And it does look like you could have been filled here on June 10th, but this is the date I published it. So to be fair, no fill as of yet. It looks like that on the chart. I did not publish this till the end of the 10th. So after the close, I believe. Get in there. But anyway, I like this still. Still looks good statistically. Number 362, this is the bull spread in the soft red winter wheat, the Chicago variety. And again, we're looking to get filled. No fill as of yet. And no change strategy. Clearly see it's a ring. Okay, so that's that. Number 362, nothing done. Then we've got the last one here, which is frozen concentrated orange juice. All in. Okay. Strategy number 363, bear spread in frozen concentrated OJ. And this one looks like it should be due a fill. Our pre-entry levels were 250, 330, 485. 250, 330, and 485. And you can see on this spike on last Thursday, did rally through 330, got to 340, and then closed on the low of the day on Thursday. Sideways action on Friday, resumption of the downtrend today. It did get through the first targets, so real fast action. Had been real toes with this. Did get filled at 190. First target, second target at 60. So basically, this has done what it's supposed to do. Off the board at some level of size gain. And the traders out there who want to stretch it, take half off around here, whatever, some portion of your position off around here, and then take the other half around 60. That's more power to. If you want to add that risk element, probably think about dropping a stop. Although stops in this market can be risky. Imagine big tails that you see, you can easily become a target on the upside. And you got to have a stop somewhere, though, right? So that is that for this number 363. got in first two levels, out at the first target, and feel free to stretch it to the second target. But for all intents and practical purposes, it did what it was supposed to do. All right, so summing it up, we got one here where we're in and out already. And then we have the wheat, which is nothing done so far. And then we've got the live cattle, soybeans, and rice, which are working at least one. Hold on. Okay, I think that's about it. Sums it up. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there. And thanks so much for watching.